all see my screen?
Yes, Nanda.
Yeah, this is George. I can see.
Okay. Okay. So we have started the fixed assets. In the fixed asset, the most important part is to create the chart of depreciation. The chart of depreciation, we cannot create it directly the chart of depreciation. SAP has given standard chart of depreciation for every country. So you can leverage the same thing or you can use the same thing and copy your own chart of depreciation. Now, the moment we copy the chart of depreciation, whatever are the depreciation areas, a chart of depreciation will contain multiple depreciation areas. Each area will specify will be maintained for some specific purpose. If at all we want to provide a depreciation by IFRS, if at all we want to show our depreciation by IAS, or if at all we have to show our depreciation by certain act, then we can show them specifically by copying depreciation areas. So each depreciation area will give us some information. Okay. Now, the important thing in the case of depreciation areas is in the new version in S4 system, we have, the accounting principle and ledgers. So within the ledger, we have leading ledger, non-leading ledger, and we have extension ledger. Of course, we have seen the extension ledger under which we may have some appendix ledger, all those stuff, right? So it is important for us to have leading ledger and non-leading ledgers only here in asset accounting. Extension ledgers are not required to be maintained here in the asset accounting. Right. Now, in the case of leading ledger and non-leading ledger, whenever we are creating a ledger, the corresponding ledger group will be created, and we need to have accounting principle associated with it. So that's where the ledgers and accounting principles are connected. Now, the moment here we assign the accounting principle to the relevant depreciation area, the corresponding ledger will be triggered. This is what we have seen on the ledger front. The other important point is the parallel currencies. If at all we have parallel currencies, it means apart from company code currency, apart from local currency, as per the requirement, if at all we create additional currencies, I mean, we can have two more currencies maintained in addition to the company code currency. Uh, it can be a group currency, hard currency, index based currency, or could be anything, right? So we need to maintain them here in the depreciation areas. So in order to maintain the depreciation areas, all we will have to use the standard one, standard depreciation area one. We will have to take one and copy the same thing. Remember, one point is for every ledger, we need to have these parallel currencies to be maintained. Suppose if at all for a particular company, we have two, I mean, leading ledger and one non-leading ledger, and it requires for each of these ledger group we need to maintain parallel currency related depreciation areas. It means it means if at all we have two parallel currencies, two ledger, it means we require four additional parallel additional four depreciation areas for capturing parallel currencies and ledgers. Okay, that's about the important point. Any questions until here? Okay, then after After that, we require this chart of depreciation to be assigned to our company code. Now, before we assign this company code, make sure that the tax codes are linked to our company code that we have seen already. Okay, 0% tax code to be assigned to our company code. That there are two places to maintain the same thing. One is in the taxes area that we have seen, and the other one is in the fixed assets. So you can assign anywhere so that system will allow us to assign the assign the depreciation area, chart of depreciation to our company code. That way, the chart of depreciation is linked to our company code. Right, that we have seen. Now we will jump on to the next one, the asset classes. Okay, first is specify account determination. Sometime back, we have discussed about what exactly the account determination, and the basically the account determination is right. So let's go and discuss something on it. Where is the Excel? We don't have. Okay, so basically account determination helps to maintain the GL, helps to maintain the GL. So account determination. Let us say in our particular organization, we have assets on furniture, we have few assets on plant, we have few buildings, we have few computers, we have some electrical fittings, okay, and we have some motor car. Okay, these are the assets we have in our organization. We have some machinery. Okay, these are the assets we have. Now, coming to the balance sheet, coming to the reporting perspective, do you want to have a separate GL for all of them, or do you want one GL for plant and furniture, another GL for building, computer, electrical fittings, motor cars and machineries? Yes, we can maintain use with the help of the accounting determination. even though even though the number range, let's say all my furniture assets numbers, remember one important point here: the furniture numbers whatever are we creating as a master data, all those are called numbers, those are not GLs. It is just similar to that of vendor and customer what we have discussed earlier. It means a reconciliation account is required to be created. One reconciliation account is required to be created based on the reporting requirement. If you want one separate one separate for each of them, we will have to create those many reconciliation GLs. Or if the business wants all of them to go into one reconciliation for all them, it goes into one reconciliation GL. Okay, so whatever are the asset numbers we have, those are called asset numbers only, similar to that of BP numbers, vendor numbers, customer numbers. Those are not GLs. So in the same way here also we call it as numbers. Let's say I'm creating furniture with a range of 1 lakh to 1,99,999, and plant to 2 lakhs to 2,99,999, 3 lakhs, 3 lakhs 99, 4 lakhs, 4 lakhs 99, 999, 5 lakhs. So if I maintain like this, these are all called numbers. Whenever I'm creating any furniture, I will have a furniture number. These are called numbers. And while creating, we are not assigning any GL. any GL. So the GL determination is happening in the configuration. That is what the accounting determination specifies. So if at all I have a separate GL for all of them, then what I will do, I'll create based on the account group range, I will give a number range for it. So I will say my GL is 1 lakh, 1 lakh 100, okay, 1 lakh 200, 1 lakh 300, like that I can maintain a GL. These GLs are called reconciliation GLs. So the accounting determination, how does this help? This helps based on the type of the type of the asset. So each type of these assets are nothing but asset classes. Asset class. So based on the asset class, we will maintain the account determination. It means for this asset class, I want to have this GL. For this asset class, I want to have this GL. Suppose, irrespective of the asset class, if I have only one GL, yes, that is also possible. You can maintain there in the account determination. And you can specifically see our asset numbers clearly for all my furnitures 1 lakh to 1 lakh 99. It means I can see all my assets, asset related balances using the asset number, the corresponding asset number. But in the balance sheet, I will have all these amounts in one GL only. Typically that is not the right approach, but I'm just giving an example. So normal practice is for each of the asset class, we normally maintain a separate GL. That is what the normal practice. Okay, that is what the normal practice. Or you can keep for all of them, you can keep one GL. For few of them, you can keep one GL. For the remaining, you can keep one more GL. That's totally depends on the business requirement. But typically if they want us, I mean if they ask us the our what is that opinion, then we will have to suggest always a separate GL for each of the asset classes, so that I can view my asset balances asset class wise. Okay, asset class wise. That's a one thing. The next we have is provision for depreciation. We have already seen why do we require a provision for depreciation. So in these asset classes, in these assets, we will do 1 month end equity called depreciation. So we have already discussed why do we require to create a depreciation. It is not a pure expenditure. It is not going out anywhere. The amount of depreciation will not go anywhere. It is kind of a provision. Okay, we are not paying this amount. Let's say the depreciation amount on particular asset is $1,000. We are not paying this $1,000 to anyone. We are not paying this $1,000 to anyone. Okay, so this will be there with us as a provision. This will be there with us as a provision. Now why do we require to provide a depreciation? If we are not paying this amount to any person outside the organization, so why do we require to create this thing? Why do we need this provision? If I procure an asset with a 10 lakh dollars and it works for 10 years, it means after 10 years we need to have this asset, this machinery in place again in order to run our production process. Now, after 10 years, if I want to purchase an asset with 10 lakhs, what happens? My cash balance will reduce. We will go into, we may go into crash crunch. In order to avoid those kind of issues, we will keep a provision so that by end of 10th year we will have 10 lakhs in our hand and we can use the same thing for procuring a new asset. That's the whole idea of a provision. Now, once we provide a depreciation at the end of the month, the entry going to be depreciation account and credit provision for depreciation. This is what the entry. This is what the normal entry. It means our asset balance. If my furniture is showing as $1 lakh, my furniture balance will show 1 lakh only in my balance sheet until 10 years. But the depreciation amount out of this asset will show in provision for depreciation. We can see the depreciated value in the provision for depreciation. It means we will maintain our asset at the original cost only. Always we will keep our asset at the original cost only. And whatever the provision that we have maintained so far, that you can see in the provision for depreciation. It means after 5 years, let us assume our provision for depreciation is 50,000. I can see 50,000 as negative balance and 1 lakh as a positive balance, so that the net amount is going to be the same 50,000. I'll have the balance amount of 50,000. Let's say my provision for depreciation after certain period is 60,000. So what is my balance now? My balance is 40,000. So I cannot see 40,000 on the asset side. I can see the difference, whatever the provision that we have maintained in the provision for depreciation account. Now, how do you want to create the provision for depreciation? This is again the same thing. If you want to have one provision for depreciation for all of these assets, you can have one provision for depreciation, or you can have a separate provision for depreciation for each of the assets. At any given point of time, if I want to know my net book value, what is my net book value over here? 1 lakh is my original cost, and I've provided 60,000 of depreciation, and my net book value is 40,000. So at any given point of time, if I want to know my net book value by asset, I can able to see only when I have a separate GL for each asset class and a separate GL for each of the provision for each of the asset class. If I maintain a separate provision for depreciation GL for each of the asset class, so that I can view my net book value at any given point of time. So always we need to maintain a separate GL for asset class and separate GL for provision for depreciation. It means provision for depreciation furniture, provision for depreciation plant, provision for depreciation building. Like that, we will have to create a separate GL for each of these asset classes. Now, the GLs, whatever the GLs that we are maintaining as part of the assets and provision for depreciation, all those will be maintained with the reference of account determination. If you want to have separate GL for each of the asset classes, you need to have a separate account determination for all these asset classes. That's the whole idea. Any questions?
So the Nanda, the terms accumulated depreciation is same as the provision for depreciations.
Exactly, exactly.
Okay, all right,
It's
okay.
the same. The term is changed.
Uh,
That's it.
also the depreciations has been is being taken because of the tax purpose also, because that way we can take it as an expense, right?
Correct, correct.
Okay, I
So the
see.
tax will reduce because of
I
this
see.
provision.
Okay, all right. And Nanda, your sound, little low. Can you just increase your volume, please?
It's maximum mostly,
Oh,
yeah. But
all right.
anyways, okay.
Okay.
Right. So this is about the account determination. So the best approach always going to be a separate GL for each of the asset class and separate GL for each of the provision for depreciation. That's the good idea always. So let's get into the system and